and welcome to the CoreData podcast, the competition of ideas. This morning I'm with Keith Cullen, who runs the WT Financial Group. Recently they came runner-up in the best advice network in Australia. That's a trend we've been observing for the past few years, and they are really knocking on the door of being the best in Australia at the moment. Keith, welcome to the podcast. Thank you for making the time.
Pleasure, Andrew. Happy to be here.
What is it that you think you've done for the past few years which has really put you in this position where you are, within tolerances of being the best group in Australia?
Well, I mean, I'd want to argue with you that we are, Andrew, but I appreciate the accolade nonetheless.
The votes are the votes, mate.
Well, the votes are the votes, and that's terrific. Look, I think I said this to you a little while ago when we were talking on this subject. What we have done is we've approached this role as an advice network operator, I think, completely differently to what the paradigms have been. And you'd need to trace that back to when we made a decision to get into this space back in 2018. What we did at the time was what my chairman referred to as running into the burning building. In the wake of the Royal Commission, everybody was headed for the exit, and we made a determination that we wanted to do the exact opposite. We saw a great supply-demand imbalance in advice coming. We thought advisors needed a licensee, an AFSL holder, an advice network that would back their professional judgment, and really place advice at the centre of the relationship. And we felt that if we were able to do that, that we'd be rewarded, our advisors would be rewarded, and it's starting to pay dividends, I think.
One of the things which is observable about your business, Keith, or the business that you run, is how much effort you put into that community space. It's really clear that you're building up a network of like-minded hearts and minds. How much of that do you think is driving the outcome and the affection that people are really clearly talking about in the group?
Yeah, well, I hope a lot of it. I hope a lot of it is because of that, Andrew, because we do put an enormous amount of effort into it. But the reason we put effort into it is back to our decision to get into this space in the first place. Is, we were a large retail business, and we made a decision in the wake of the Royal Commission that we thought there was a great opportunity to do things very differently in the space than what licensees had done in the past, and to place, as I say, advice and advisors at the centre of the relationship. And that's the core difference in our business, and it's resonating with the advisors. Key to that is our relationship with them on an ongoing basis, supporting their personal and professional endeavours, whether it's our PD days, our Optimum peer groups, our conferences, our live streams that we do. We're constantly engaging with the advisors about the delivery of advice to their clients. And I think that's a fundamental difference.
So this is a really interesting point, because the delivery advice is kind of at the guts of the next big question. The CoreData modelling, and anyone's capable of doing this, shows that there's about 6 million Australians who need financial advice. We don't have the advice network to provide that.
Yeah. How
are we going to solve that? Is that going to be digital? Is it going to be increasing scale for advice businesses? Is it going to be through compulsion? What do you think is going to solve that in the next 5 years?
Well, I think we've been really consistent with the government on this over the last few years in different submissions that we've done ourselves, and also with different lobbying groups that we're involved with. I think people are conflating two issues, Andrew. Is there's access to and the affordability of good quality professional advice, like thorough advice. And the biggest driver to value in the profession at the moment is also the biggest risk and the biggest downside for consumers, and that's the shortage of advisors. So when I say it's the biggest driver of value, that supply-demand imbalance is driving prices and profitability for the profession.
There seems to be no solution to that. I can't see that being solved quickly.
There's a simple way to solve it. The government knows what the solution is, Andrew, and they just need to pass the legislation to fix the debacle that was FSEA. Everybody knows it. It's not difficult to see it. What was supposed to be a relevant degree with a small r and a small d got hijacked by some crazy board that decided to create a very esoteric degree and capitalise the term. And what we've ended up with is last year there was 120,000 business graduates in Australia, give or take, from business schools. 480 of them did a capital R, capital D relevant degree. Now that is absolutely absurd, and no amount of fantasising about creating an attractive profession, etc., is going to get 17 and 18-year-old kids to commit to such an esoteric degree when they're choosing university. So we know what the solution is. Get back to what FASEA was supposed to be, which is a small r and a small d relevant degree. Treasury's done the work. They've set the boundaries out for what it should look like. Minister Jones, back in February of this year, stood up at a conference in Canberra and committed to making the change. Luke Howarth, when he was the opposition minister, supported that very same day, said the opposition would support it. Daniel Molino has said it's top of the pops and an important thing to do. Let's just do it.
What do you think's holding them up?
I've got no idea. You know, you'd need to ask Daniel Molino, but the profession needs to hold this government and the opposition to account, because if you want to make professional advice more accessible, more affordable, you need to fix that supply-demand imbalance. The way to fix that is to let the profession get back to recruiting sensibly. And look, there were 30-something thousand commerce graduates last year. Imagine being able to choose from those to recruit, bring them in, get them straight into their PY, give them some vocational training and get them in front of people. But it's not just the graduates coming out of school, it's all of the potential career changes. What an enormous opportunity. The demand is definitely there. That will drive prices down, as will the implementation of technologies, you know, all of these efficiencies that we're seeing coming into practices now. But those things working together will seriously address the affordability and access to proper professional advice.
Couldn't agree more. And it's a worry to me when you look at the age curve of advisors, because we are a decade away from this becoming a real problem. And it's going to be a very steep on-ramp when it happens. And unless we solve it now, we're in real trouble.
Yeah, look, I keep talking to people, Andrew, saying the supply-demand imbalance is working in all of our favours at the moment. It's attracting a lot of capital into the Australian marketplace. The private equity's coming in. It's enabling practices to improve their margins, improve their profitability. But by the same token, whilst that opportunity is fantastic now, it's also the biggest risk to capital. Because in 10 years' time, if this matter is not resolved, we'll fall off a cliff in advisor numbers, and then the assets will be worth nothing because there'll be no one to sit in front of the clients and no one to buy the assets.
Speaking of risk to capital, one of the things that's constantly on my mind and must be on yours is the way in which the industry sort of bumps up against problems. At CoreData, every quarter we run a trust survey of the Australian population to figure out what the trust is in Australian financial planners. Was very low at the point of the Royal Commission. It was down to 2 out of 10. It's now at 6.1 out of 10, which is the same as an accountant and the same as a lawyer, and it bumps around in that range group when it's done really well. We've recently had yet another scandal. This wasn't, as far as I can tell, a systemic failure, but a series of bad actors trying to exploit the system. How do we separate the industry from people who are bad actors? Because there's nothing you can do about people who first set out to deceive.
Well, I don't know that I agree with you that it wasn't a systemic failure, Andrew. I think the system failed consumers really badly. And, ASIC, I don't need to go over who the different parties were. ASIC's highlighted where they think the problems were, and the problems were definitely systemic. People were either turning a blind eye or were asleep at the wheel at a number of critical levels. They were one of those two things, either turning a blind eye or actively involved in in certain cases. Certainly the marketers, some of those advisors themselves are definitely playing an active role. The people running those funds definitely playing an active role. I mean, in certain cases, it looks like they were just willy-nilly stealing money out of the damn things. But look at all the people and all of the consumer protections that were around that space that were supposed to look out for these things. Whether that was research houses, whether it was trustees, the superannuation platforms, the AFSLs, everybody missed it? I mean, that's a systemic failing if everybody did miss it.
I think that's a really interesting point. So I would have to tend to agree with you when you put it that way, because there was 4, as far as I can tell, gateways that they had to pass through, and they seemed to pass through all of those. But it was bad actors kind of misrepresenting data all the way through. But it is on on the watch of the people who are supposed to be regulating, who clearly didn't regulate it, which is a very interesting outcome. That's never going to go away for the industry. There's always going to be inside an industry like financial services some sort of issue which goes on. As it's true of every other industry, as it's true of doctors and dentists and lawyers and accountants, there's always going to be an issue to face. Do you think we're enough on the front foot in talking about that?
Look, the last thing, I don't think we're enough on the front foot of talking about the systemic failings that have allowed it to occur. I think what I've seen, though, is a lot of knee-jerk reaction of people saying we need new legislation and we need more legislation. Govern me harder, Daddy. I don't think we need any further legislation. We just need people to be held to account for what their responsibilities are in that space.
And who should be doing that? Who should be holding them to account?
Well, it's, the government and their instrumentalities. So you've got the regulators there in ASIC and APRA should definitely be holding them to account. And this, from ASIC's perspective, maybe it comes back to the funding model. Do they need more funding? I don't know. As an advisor and as an advice network operator, I'd rather be giving them funding for proper supervision rather than us and our advisors having to pick up the pieces through the compensation scheme of last resort.
Yeah, I completely agree. There's an interesting part about this because the way in which you've structured your business and some of the other networks who are like you who are really leaning into this, you can see how you've got the resources and the people around you to sort of put those levels in place and those operational points in place. But there's plenty of others that don't have the systems and resources that you have, yet are also called advice networks and licensees. How do you deal with what is transparently becoming a multi-speed model, from extremely well-resourced and really thoughtful about what's going on to a guy above a fish shop in Parramatta? No disrespect to fish shops in Parramatta.
Well, no disrespect to some of those smaller licensees either, Andrew, because I think a lot of them are doing a really good job. And if you look at where some of the failings have been over the last few years, is they haven't been necessarily at that smaller licensee level. Look, we don't worry too much about what other people are doing from that respect in our own business. We're just really focused on delivering outcomes for the advisors and the advice practices in our network. Obviously, we're very politically involved. We'll always have an opinion with the government, is happy to share that opinion with them. But our real focus is just on our network. I'll just come back to one thing I mentioned before, because I talked about the conflating of two issues, so I just wanted to cover off on it so that we didn't get away. The other issue that I think people are conflating when they talk about access and affordability of advice, and people talk about, say, that 6 million consumers to be served, they're not all going to require or be able to afford or have the asset base to make it sensible for them to pay for proper professional advice, even if we fix the supply-demand equation. The big difficulty that we've had in this country goes back to the Westpac or ASIC versus Westpac decision, Westpac BT decision of a few years ago, when ASIC sued Westpac and BT over accusing them of having given personal advice through a general advice channel. My understanding of it was ASIC lost the case, ASIC appealed, won the case, and Westpac and BT took it to the High Court and the appeal was upheld again. What this led to is there was a determination made in the appeal that said that consumers had the right when a general advice provider knew certain details about them, consumers had the right to assume that they were getting personal advice that took into account their personal circumstances and objectives. And what happened was all of the product providers shut the door, by and large, on providing general advice to their consumers. So you've got this ridiculous scenario now where people ring their super fund or ring their insurer. They want the simplest guidance and information to enable them to make a decision, and they're not getting it.
No.
And so what we've had happen is the government's gone, after the levy review or the quality of advice review, we need a whole new class of advisor. Well, so be it. You can call them what you like as far as I'm concerned. What we need is those product providers to be able to talk to their members in the case of super funds, their policyholders in the case of insurers. We need them to be able to talk to them about what their options are, what they can do, not what they should do, because that's personal advice, but what they can do. And the more they know about the person, the better it should be, because they can give them proper information about what their options are. We need to see that happen as well, Andrew, because if you really care about consumers being able to make informed decisions, just opening up the bandwidth of professional advice isn't going to get you there. Because whilst I don't want to say that it's a completely luxury service, it is a service that unless an advisor can have a meaningful impact on somebody's life in terms of their outcomes, it doesn't make sense for them to be paying for it. So at that sort of lower end and the simple information end, we definitely need to get back to the product providers being able to help those people. And right now they can't in any practical way.
I completely agree. And we're seeing those in-house services being stretched. I want to focus on something really clear now. In the next 3 years, what are the critical things that you're focused on here? What do you want to deliver in the next 36 months?
Yeah, I think we're in a bit of a golden era, I think, for advice, Andrew, and we want to continue to deliver what we've set out to do. A large part of that is around helping advisors run more profitable and efficient businesses. And how that's resolving itself in our network at the moment is, we've done a joint venture with merchant partners out of the US, what we call our Investco joint venture, and we're providing capital and intellectual property to help advisors come together and build more efficient businesses, to help them properly with their succession planning and with their expansion planning, to really take this profession from being what is pretty much still a cottage industry to a large extent into being a lot more professionalised. Now, the advisors themselves have become professionals and are getting more professionalised. I think the structure of the profession needs to change now. It needs more scale about it that is better for clients because they're in a more efficient structure where hopefully costs will come down for the clients and at the same time margins improve for the practices, and also set advisors up to have a proper transition into retirement rather than this sort of just putting the white flag up at 63 years of age and taking whatever multiple the market happens to be at the time. So that, I'd say to you, is our biggest focus. And then politically for the profession, we're back to where I was sort of 10 minutes ago or so when I said the number one issue for this profession at the moment that we need the government to address is what constitutes a relevant degree. All the rest of it's window dressing.
Yeah, I think I tend to agree on the relevant degree side because that will open up the opportunity. I'm much more interested in, I do think there's a role for very young people to get into, but I'm really interested in for people who are second careers in their mid-30s to early 40s, sort of saying, I'm going to enter into this industry. They're going to bring experience, but they're also going to bring capital and they can run businesses, which is going to drive liquidity into the market, which I think is a real risk in the next 5 years unless we get that right. On the back end of that, though, what's happened globally, and particularly looking at the UK market, at the time of doing our last research report, 25%, give or take, of UK advisors were owned by private capital. Mm-hmm. Our research and our loose research showed that would be 30% by Christmas time. Do you think that's going to happen here, and what effect is that going to have on the market? Yeah,
I think it will happen here. I mean, it's happened, I think, in all professions. A mate of mine went to the US to be part of a roll-up of advertising agencies a few years ago. So it's happened in that professional services space. It's happened in dentists. It's happened in medical clinics. It's happened in political lobbying firms around the globe. Have seen private equity come into them. Look, I think it will. I think there's a downside to that straight out private equity, and I want to make a big distinction here between what we're doing in terms of bringing private capital into the space within our network and what that traditional private equity model is. And that is that our model with Investco is the same as Merchant's model globally, and that is we only ever want to be in a significant minority position, Andrew. We're not trying to do one big roll up into a massive beast and then take an exit at some point. Both ourselves and Merchant, and therefore it's the same with Investco, our joint venture here, operating businesses. They're permanent operating businesses as we're looking to long-term hold significant minority interests in a number of different businesses. Now, that's very different to the traditional PE model.
That looks 5 years and out.
Well, or 5 to 7 to 10 even. I mean, there is some patient private equity funds out there, and I know they'll all say that they're looking for a 5 to 7 year exit, but in a lot of cases that ends up being 7 to 10 years. But it's still that control model, if you like. Now, I'd say to you that in professional services, there's a big risk as an investor in that is going into control, because if you turn everyone into an employee and at the same time there's a shortage of those employees, then you risk them going and parking their car across the street for a few extra dollars, and their entire motivation being, where's my next increase? How much is my bonus this year? If they're not satisfied with it, they go and park across the street. And now we're back to who's going to sit in front of the clients and where's the value being created. So I think there's that risk. But even if you fix the inflow of advisors, I think, it's a big stretch to go straight from a cottage industry into what I'd call mega firms. The PwC sort of model of having hundreds and hundreds of partners or senior associates and so on. Well, it is, but the accountancy model evolved over a very long period of time, Andrew. It didn't go straight from being a cottage industry to being that overnight. And so I think our model, I've talked about the reasons it suits us. Ourselves and Merchant are operating businesses. We're not going anywhere. We don't want our capital back at any point in time. We've got liquidity in our business already ourselves. So, we don't need to create liquidity down here. And so that's not something we're trying to achieve. It's not a short-term gain for us, but also for us strategically, I just think as an investor, is you want the people that are providing the advice to be the ones that are the largest shareholders in the business.
Completely agree. I'm going to finish on this question. I think, and we have a lot of research that shows that advice fundamentally changes the lives of those people who undertake it and get involved in it. We thought that it would accelerate over $2 million and be useless kind of under that. And the data's shown the opposite. There's anything from kind of $50,000 up to $2 million that provides extraordinary value. And from there, it's inferential, right? Because you've probably got enough. How is the industry going to continue to change the lives of the Australians as the 6 million move into retirement, as they move through this?
Yeah, it's interesting. I mean, if you followed things that I'd said to government over the years, as I often say, I wish they'd just stop meddling in the superannuation and tax systems, and I wish they'd stop meddling in the social security system. But the reality of it is, the more they do it, the more people need advice. So, from a selfish perspective for advisors, but also the more they do it, the more impact advisors can have. Now I'm talking about, when I talk to people external to our business and talk to them about what it is that we do every day, there's this automatic assumption, and fund managers have this assumption as well. Oh, are your best advisors targeting the high net worths? Are your best advisors the ones with the most funds under advice and so on? Are the most successful ones there? The reality is that that's not necessarily the case. Is all things being equal on investment performance, where advisors have the most impact and can have is in those structural issues. And you don't need a hell of a lot of money for an advisor to be able to have a big difference, make a big difference for you in getting yourself structured correctly, both on the run up to retirement and when you're in retirement. So the more complex they make the laws, probably it's challenging for consumers, but it does mean that advisors are able to have a real impact for people and make a real difference to their outcomes.
Yeah, the research is very clear on that. Keith, thank you so much for your time. Congratulations on what you've achieved in the past 3 years. You've taken this, frankly, from middle of the pack to bumping around at the top, and it would be unsurprising to see you stay for the next little while. I wish you the best of luck, and I know you're not going to be short on effort. Thank you for your time.
Thanks, Andrew.
Right.
Appreciate it.
Pleasure. Thanks for taking the time to listen to the latest episode of CoreData's podcast, where we try and unpack the big ideas in the industry. If you want to know more, just log on to coredata.com.au and you'll be able to access the episodes and other information. If you want to know more about WT Group, they're pretty easy to find on the internet, and they're one of the listed companies in Australia. So there is a plethora of information about who they are and what they're doing, and they're making their intention really clear.